Good afternoon, everybody. I'm here today with Matt McLennan, who is one of our top industrial brokers up in our Tacoma office and a board member at Kidder Matthews. Say hi, everybody.
Thanks for having me, Carter. Glad to always chat with you.
I thought it would be fun today, Matt. A lot of my clients, I'm more office flex, kind of learn more about how 2025 was for you in the industrial market, what you guys are looking up in Washington at, and then kind of how is 2026 looking?
Good question. I wish I knew the answer. I'll start with that. No, jokes aside. 2025 was really interesting. It was, I'll start by saying it felt a lot like 24 and 23. And that's us coming out of, the crazy COVID years with cheap money. And as you know, when money got expensive, that was kind of the first flip of the switch, among other things that really changed kind of market conditions really across the country. But here in the Northwest, especially, Seattle and Portland kind of follow each other a lot there. And so I would say by all measures, I mean, we had if you were to look at like pure market statistics, like numbers on paper, like we had a decent year. Absorption was kind of up and down. We did some, pretty decent construction deliveries, still have new construction coming out of the ground, albeit at much lower levels than in previous years. We had some, great, notable, large size deals and tenants make moves in the market, but we also saw some leave the market. So a lot of ebbing and flowing. And I think, again, kind of going back to what I was saying about 23 and 24, we're coming out of those crazy COVID years where now it feels like it's very easy to get lost in the negative, I think, because we're coming off such great years and it's like, oh yeah, the market's down again, or things are slow. And there's no matter how you skin it, there's some reality to that. But I think you gotta look at the positives and kind of what we're taking away from that really as we head into 2026. And I'm of the opinion that 26 is, to me, shaping up to look like definitely a better year than 25. I think it went kind of 22, 23, 24, 25, and we're kind of slowly on the stair stepper back up. I'm seeing a lot more activity on listings that I have. I'm seeing some more tenants on the market. The reality here in Seattle, I'd be really curious to hear what it's like in Portland in comparison. I think I have a lot of optimism as to things happening in our market next year. But what I look at as a real fundamental, I wouldn't call it an issue, but a fundamental metric to pay attention to is our supply that's available on the market right now, our vacancy rate. I mean, I was just talking about this with somebody the other day. I think we have over 20 million square feet of industrial space in the greater Puget Sound industrial market. And historically, we might absorb anywhere from, maybe 4 to 8 million square feet of space. Don't quote me on that. But I mean, we have years. On paper, we have years of supply, and we still have new supply getting built. So fundamentally, if you're an economist or you're just looking at numbers on paper, like we've got some supply to work through. So there's going to be some landlords with empty spaces that have had empty spaces for a long time that need tenants. We need tenants. That's what we need in this market.
I mean, we all need tenants. You mentioned a lot of new larger deliveries and large tenants leasing more spaces. That are those tenants moving around because, hey, they're looking for larger clear heights and bigger buildings. Like, why are those tenants moving in the market today?
It's you kind of nailed it. The problem with the numbers, again, if you keep going back to that, is like we'll see a big Amazon deal. I mean, the Amazon's the best culprit in industrial to use as an example. They're going to go lease 1 million square feet of building, which is phenomenal, right? But they probably left a old defunct 1 million foot building to lease that new 1 million foot building. And so we're seeing a lot of trades. And so if you're developing new Class A construction, back in the heyday, it might get pre-leased. These days, you might have 6 to 12 plus months of downtime before it gets leased. But the good news is they are getting leased, and they're getting leased at great rates, sometimes even still pushing rates up. It's that tenant leaving the Class B, C building to go to the new construction. So the new construction guy is winning. The Class B, C owners are really getting punched in the face. And then those buildings are sitting empty. They have to drop their rate. They have to offer crazy concessions to get the next tenant. They're going backwards. And even though that specific landlord is going backwards economically, it's also sending the market arguably backwards a little bit, just because we're trading space. We're not really absorbing new space. We're not decreasing supply. We're actually either probably holding supply steady or even increasing still at this point. So I always like to boil it back down to the fundamental supply and demand.
Yeah.
Supply, demand. 2020, demand, supply. 2025, probably going into 26 too, supply, demand.
And when you're talking about older defunct buildings, are those kind of more 1980s, 1990s, kind of 20-foot clear height kind of buildings, and there's more of a preference for some of these 30, 40-foot clear height buildings with a lot of these new users?
It's clear height. It's maneuverability, getting trucks in and out of buildings, dock door count, how big's the truck court, and really these days too. It's also they're all fighting for employees. Is it a nice building to go work in? Is it in a nice area? Does it have new functional office? Of course, you can build out new functional office in old space too, but um, tenants kind of depending on the tenant type, they seem willing to pay the premium for new, and which is I think it's great. Makes a ton of sense. Other than it's leaving those older buildings and those landlords of those older buildings in a tough spot. I mean, is it similar to what you're seeing up there?
Yeah, definitely. I think but the things and similarities that we share is that flight to qualities, I think is what you're kind of alluding to. Definitely whether you're suburban, excuse me, we'll cut that. Whether you're in a suburban market or if you're downtown, I think just all across the United States, but in particular in Portland, there's a flight to quality. At the end of the day, tenants don't necessarily want to be in a Class B or Class C building. And now, frankly, just with a lot of basis resets going on, especially in office, we're seeing, Class A pricing being at Class B pricing now, historically. And so you're seeing a lot of these groups where, hey, 5, 10 years ago, I couldn't be in this building, but now I can actually afford it. I'm going to move my employees back into those Class A properties. I think that, much like you're talking about, I think unfortunately down here, particularly in the office, we have year-over-year negative net absorption. And so frankly, I think one of the interesting things that we're going to see, you were kind of alluding to, hopefully some better leasing activity next year. I think we're hoping for the same. You're seeing a lot of these larger national companies asking their folks to come back to office. And I think that you're going to really see a push for that by next summer is a lot of announcements of all these Fortune companies going, hey, we were doing this kind of 3 to 4 day a week hybrid model. Hey, now we're in 4 or 5 days a week. And so I think a lot of these folks that signed, 5, 10-year leases back in the pandemic, having to go out and do an expansion or in their existing premises, or go out and try to find something that will eat that lease term, that leftover lease term as part of their concession so that they can, gain 20, 30, 40%.
Yeah, makes sense. What are the demand drivers in Portland? Like what does Portland have going for it?
I think that's the $1 million question right now is I think that unfortunately, we're not like a Seattle or an LA. We're primarily a tertiary market. I think that one of the things that Portland really offers is really great outdoor amenities. So we have the mountains, we have the forest, we have, the high desert. I think we have an awesome culture in the food and that sort of stuff. I think that some of the things that we're battling, you see this on a state level right now, new task force being organized. The governor came out a couple weeks ago, was talking about how we need to make Oregon and Portland more specifically more attractive to businesses is we really need to fight our taxes. And I think that if we're able to do that, we're going to attract a lot of this these different AI groups that are kind of operating down in California and Washington, and hopefully attract them to Portland. With a lot of the major layoffs in some of these tech companies and out at Intel, we have a lot of employees that are looking for jobs. And so I think that if there was a group that was willing to come to town, they would be able to staff up pretty quickly. So you kind of were mentioning, hey, there's not a lot of employees available right now for the jobs that we're looking for. We have a lot of employees that have even been laid off from Nike or Intel right now that are looking for jobs. So, job growth, hopefully if we can, snag some big corporate companies to come into Portland, I think we'd have a lot of employees for that.
Yeah, it's always been so interesting to me. I grew up in Arizona. I moved up here to the Northwest I think it'll be 12 years ago now. The Northwest is so interesting to me because there's so much going on up here. I mean, it's such a beautiful place to live. People love the environmental amenities. You look at population metrics, we continue to grow like a lot of other great places. But then, on the flip side of that, whether it's the tax consequences, certain regulations in place, to ask any business owner, this is not an easy place to do business. And it's very much like California, right? I mean,
Yeah.
California, anybody who's spent time in, whether you like California or not, you cannot deny California is a beautiful place. And it's a great place to live too. There's so much going on down there, but they have such a strict business operation environment. And the reality is all of us get up every day and go to work and have to run a business or work for a business, right? Um, it'd be really interesting to see. I'll be curious to see what happens in 2026 as it relates to that. Washington got a new governor this past year. Um, I think he seems to be mirroring, a lot of the same general policies and positions as our last governor. But either way, you got a new head honcho in charge. And so, yeah, I mean, 2026, we'll see. Again, I think it's going to mirror a lot of 2025, if I'm being honest. But I do think we're trending back in the right direction, whereas admittedly, I feel like we've been trending down for a couple of years. So it'll be
Yeah,
interesting.
I think one of the things that I'm hopeful for Portland is I think we've been really struggling with an image issue. And, people will say, downtown Portland's dangerous, or, hey, I just don't feel safe coming downtown. And I ask a lot of those folks, when was the last time you really went downtown? Like, when was the last time you went
Mm.
out to dinner or went into the office? And the common trend that I hear from a lot of people is, oh, well, I talked to my brother-in-law or my sister or cousin or a friend that works downtown. Yeah, I've been downtown in a year. And so I think that if we can, for a lot of these companies start forcing their people to come back to the office, I think people will see that, Portland is not the way it was 5 years ago. It is actually safe to be in. There is actually people coming down here. I was down to the office last weekend working, and I mean, the streets were packed. I couldn't find street parking. Where,
Oh,
you
wow.
know, 5, 6 years ago, it's like, I just drive up, Saturday morning at 9, 10 o'clock, and I could just park. There's a ton of people around downtown. So I think that that's one of the things that we're struggling with, and I am hopeful that if people are forced to come back to the office, I think if you look at the West Coast compared to the rest of the country, we've been a lot slower to pull people back in because the culture is, hey, we do like working from home. We do like that flexibility. And so I think if a lot of these larger companies do that, then all the kind of the mid-level and then smaller local businesses are going to start mirroring those same practices. So I think that'll be really, really interesting. A couple of things that I'm looking for in 26, again, is just, the tenant demand. You kind of mentioned that earlier. We really need it in Portland. So I think that hopefully people realize that, our market, the employees are a lot cheaper than up in Seattle. Sorry. But we have good employees down here. We have cheap office space. There is good culture. There is great walkable amenities in our city. And so that's one thing that I'm really hopeful for. I think one of the things, and I don't know if you guys are experiencing this in your world, but a lot of these buildings going back to the banks and then trying to figure out, hey, which landlords can actually do deals and fund TIs and that sort of thing. I don't know if you guys are running into any of that at all.
Yeah, we are. I mean, the cost of owning and managing and continuing to invest in your real estate just continues to go up. So, I mean, there's obviously new construction, and that's kind of its own segment. And then you're looking at like office. I work in an office here in downtown Tacoma, so not Seattle, but sister city to
Yeah.
Seattle. And we were just in a meeting with some of our office brokers on Tuesday this week, and I was asking, they were talking about a recent transaction they did, and I was hearing the baseline numbers, and I said, what was the break even for the landlord on that deal? And they're like, oh, year 6 or 7. And everyone's like, whoa, I mean, when you factor in, the monthly rate, which frankly was a good rate for the building, especially given, market conditions or whatever you want to point to, but just the cost of these TIs, the
Yeah.
cost needed to be paid by these landlords to secure these tenants. And I mean, you and I both, I mean, look back 5 years was our first COVID year. I mean, how quickly things can change. And you're signing a deal that you don't break even until 6, 7 years. Who the heck knows what things look like in 6 to 7 years, right? It's a huge bet. But what's your alternative? Give the building back to the bank, do
Yeah.
nothing, continue to pay operating expenses. At some point, you got to take a bet if you're going to be a real estate owner. The good news is, I think, again, we're seeing more people taking those bets, more owners feeling a little bit bullish. The return to work thing, I think, is continuing to trend in the right direction. And the reality is, like, there's strength in numbers in most situations in life. At least that's what I believe. And when you're talking about the perception, the safety issue, I mean, if
Yeah.
there's more people in these buildings working together, walking around, parking, getting lunch, going out at night. I mean, these areas inherently become safer and more attractive if there's bodies and people walking around, right? I mean, it's like the
Yeah.
problem. It's not a it's not really a it's a it's not a prophecy. I mean, it's like, I mean, we know the answer to this, the problem. It's, you know, you just got to, but it's, you and I can't make it happen. I mean, we can only be
Yeah.
part of the solution, but anyway.
Yeah, and I think that what we're going to continue to see in 2026 is a lot of these private capital companies, at least in the Portland metro area, continue to win a lot of deals where a lot of these institutional investors can't. But one of the things I'm really hopeful for in 2026 is that return to office. And, you know, you mentioned it, a lot of these deals are pretty bloody from the landlord side. I mean, you know, when I got into the business, there was no such thing as a $200 a foot deal unless you were doing a medical deal. And now a lot of these new construction office deals that are going on, you're seeing 200, 215, 220 a foot. And it's just like, you know, how do you make sense of that when then you're stacking on a year and a half of free rent? I mean, these deals are really, really hard to pencil and they're really, really expensive.
Yeah. Separate from the market conditions in Portland in general, what are you doing next year in 2026 with your brokerage business, with your clients? What's one of your big goals you think to kind of help your business and help your clients?
Yeah, so I recently teamed at the end of last year with my partner Grant Guernsey. So I think a lot of what we're trying to do is more get in front of a lot of our clients and a lot earlier on, you know, 2, 3 years out, make sure that they understand, hey, where is my property at? What's going on? What are the market drivers, whether it's the entire Portland metro area or their particular submarket, and just make sure that they feel really informed of what's going on. So I'd say that's one thing. Doing a lot more public speaking and content creation like this. But I think one of the things I'm most excited about is I know you said just brokerage related, but I'm going to be a new dad in January. So I'm excited to kind of figure out how to, you know, that whole work-life balance with kids. So I'm really excited about that as well.
Good for you, man. Congratulations. That's awesome.
Thank you.
Yeah, I'd say I think for me, it would be we've the in talking with business owners in particularly who really are the bread and butter of my client base. If you're a business owner right now, it is very hard to feel confident making a big decision. Everyone's kicking the can down the road. It feels uncertain on the day to day, whether you're looking at it on like a macroeconomic level, what's going on with the local real estate market, what's going to change politically, who's going to be in charge, do we have more tariffs? I mean, there's it's I
What
feel
are
like
interest rates doing?
yeah, I mean, it almost feels like it's never been easier to make an excuse not to do something. And you
Yeah.
and I aren't in the business of making people do something. However, we are in the business of informing our clients and helping them get comfortable making decisions, particularly as it relates to their real estate. So what I want to do in 2026, you know, more of than I did even in 2025, is spend that time giving my clients as much actionable and reasonable information as they can. You know, I can't tell them what interest rates are going to be tomorrow or if there's going to be a tariff or not or something. You know, those are things that are out of our control, but I can inform them better on what's going on every building in their neighborhood and understanding what their growth plan is subject to what's going on at the macro level, and then really getting ahead of it. I mean, to your point, you know, these real estate decisions, oftentimes they very often get made 6 to 12 months in advance. However, they really should be made 3 to 5 years in advance. And our clients, unfortunately, you know, and not to their fault, they're running their business every day. I mean, they can't spend the time like you and I do thinking 3 to 5 years ahead in the real estate market. The reality is they kind of need to. And I think that's where we come in to take that burden off their laps so that they're not forced into making a 6 to 12 month decision when you don't have a lot of time to make a good decision. And you're going just looking at the current conditions going, well, can't be a big decision because, you know, I don't know what's going on tomorrow. So that's what I want to do in 26. And I think it'll help my clients. It'll help me. The market will continue to show, you know, pay dividends from that. So that's what I'm looking forward to.
Yeah, it's just so funny when you mention all that stuff. I mean, we kind of have similar answers there, but you know, if you remember 8, 10 years ago when we both got in the business, I mean, it just brokerage now is just so much more different, and I think that we owe it to our clients to do a lot more strategic planning, and the effort that's in these deals is, you know, 100% more than it used to be, and I think making it clear, predictable process, and making sure when they sign on the dotted line or click the DocuSign that they're like, "Yep, this was the right decision." That's when it makes me feel really good in a deal.
All right, last question. When's the due date?
January 9th.
Oh, you're right around the corner, man.
Yeah, so we're very excited for our baby girl. So it's gonna be a fun year with a lot of change.
Good, man. Well, let's end it on that good note.
Yeah.
Nice chatting with you as always. And if I don't talk to you, have a great rest of your year, and we'll kick it off hard in 26.
Yeah, definitely have a great holiday.
Cheers.
Appreciate it.